Good afternoon and welcome to Agri-Talk. We'll be talking about business of farming today.
Yep, the business side of it.
Right.
Money.
Well,
to a degree, financial.
in planning, how to plan out your crops and what you're putting in to make sure you get enough out of it so you can stay in business.
Right.
Which is always important.
It is. It is really important, and I think probably greater today because a lot of the way it is today, the younger farmers, they don't know that they've had a lot of problems in the past. You know, a lot of less yield, less value in their crop. They've had to plan a lot more. So yeah, big.
And the crop value, the prices go up and down, and you're not selling today what you have in the ground today. You're selling maybe next year,
Right.
at the price you don't know of.
Right. You're just you're trying to take a guess that you'll get a good price now for possibly the crop that you're going to raise next year.
So I don't know if farmers are more faith-based or just gamblers.
Well, yeah, exactly. I think you're right. It's probably more gambling in some cases. You got to roll the dice and hope you have a good crop, and hopefully you don't have a crop failure.
Right.
I guess, and in that case, you hope you have insurance. And a lot of people go, well, what do you need that insurance for? Well, you'll find out.
Right.
If you have a bad year. That's right. So.
And we did a show about that. So if you're looking for insurance for crops, look back on YouTube at some of our other shows. You'll find that. We did talk about that.
Right. Today
Today we have an expert on the topic of planning out your farm and how you do the business of farming. Mr. Chris Bruynis. He's an agricultural natural resources educator from the OSU Extension Office in Ross County. So,
Hi,
welcome.
Chris.
Good to be here. I almost got up and left when you said you had an expert.
Oh.
I was trying to figure out who that might be.
Yeah, we were looking around and where's he at? Yeah.
So,
No.
Well, you're an expert to me. We were talking earlier, and it was all over my head.
Today you're the expert.
well, what I bring to the table is some experience. I farmed 10 years for myself, starting in '82. So we went through some of the rough years with high interest and low prices, and was able to survive that. And then I went back and got some more education, and I think I can put that to practice in helping people figure out what they might want to be doing and what they might want to be paying attention to right now.
Right.
You were mentioning earlier, Mike, that the prices go up and down, and I think one of the things that we see now is a lot more volatility in the market.
What's causing that? Do you know?
Well, I can figure that
too
out.
many things.
If I can figure that out, I can quit my day job, I think. That's, but there is a lot more volatility. I mean, we can all say, well, it's supply and demand. I mean, just look at gas prices here this past week went up 50, 60 cents. So we used to not see those kinds of movements that quickly. Corn prices, again, a couple years ago we were $6, a year before that $7, and now we're sub $4. And so that movement in price, it's hard to plan in terms of what can I afford to do. And so we have to do budgets. We have to pay close attention to our financial statements, to our balance sheet, to our income statement, and figure out what it is that we can afford to do, what it is that we're doing. There was a lot of, and we didn't mention this earlier, but this might be a good place to start the discussion. There was a lot of farmers in the last 5 years that every year when they looked at their balance sheet at the end of the year, they said, oh, my net worth continues to go up. Well, but if I appraised my land and my equipment values as what the market was doing over the last 5 years, I might have paid $1,000 for that land, and now all of a sudden I'm at $3,000, $4,000, $5,000. My net worth increased dramatically, but I really didn't earn any profit.
That's not cash in the bank.
That's not cash in the bank. And so I think it's really important to separate out, and when we talk about balance sheets, we want to do a cash versus a market accrual balance sheet so that we can figure out how much of this is coming from appreciation, or if we're going the wrong direction, if we're losing net worth, how much is coming from asset depreciation, and what's coming from profitability. Did I make money running this business? And that's the piece that I think we really have to pay careful attention to, especially now for crop farmers. And again, livestock farmers, especially the beef industry, we have a lot of beef in this part of the state, right now they're enjoying significant profitability that's not going to stay around forever either.
Is that because of some of the stuff in the West where they've had droughts and other places are not producing well?
That's what started it, I think. Yeah, I mean, demand has stayed strong, exports are okay, and so I think it was the supply side. We had to eliminate a lot of our cows because of drought out west, and so our cow numbers just got so low. And I mean, the beef industry is in the process of repopulating that. But again, once it gets repopulated and that supply goes up, law of supply and demand still works. And if our supply goes up, then the price has to come back down. And so we have to be careful to look at that profitability of operation, and don't get to the point that we think this will always be there because the volatility is so great. I think we have to enjoy it while it's there, but prepare for when it's not.
So when it's good, put some money in the bank so you're prepared for the lean times.
Well, and that's a great point, because the other problem that farmers have had, and I'll go back to the grain industry here recently, when they had that $6, $7 corn and $15, $16 soybeans, they were making profits at a higher level than what they historically have done. And so all of a sudden, when they got ready to pay the tax bill at the end of the year, that was a pretty big number. And so they went to their tax accountants and they said, we want to lower this number. How are we going to do that? Well, one of the tools they had, and I say had because we don't have it for this year yet, we think it will come, we think Congress will pass that, is the Section 179 and bonus depreciation. And so they could buy a new piece of equipment, a $30,000 tractor, $500,000 combine, whatever they need, and write as much or all of that off in 1 year as they needed to manage their taxes. Now, even though they were able to pay a pretty good down payment in cash from profits, they're still financing. And so that debt still lingers beyond, and so we created that debt when we had these really high prices, and now we have to pay it back with very low prices. And so that becomes very problematic.
Right.
And so again, the beef industry, I think, is right there right now. We're having some very high prices. I talk to the equipment dealers and they say, hey, hay balers and hay mowers are going out like gangbusters. And again, are we doing it because we're finally getting some profits and we need to upgrade the equipment? Well, that's the right reason to be doing it if we can show continued profitability. Or are we doing it because we just don't like paying taxes and I really don't need it? Well, my advice is you might be better off paying that 28% taxes and keeping the rest in the bank rather than creating debt that we have to pay off once this good times are past.
Because that's increasing your cost per acre when you bring more debt in.
Yeah,
Kind
each acre has to service a larger debt.
Right.
So when you go back and again, we can talk about financial ratios for a little bit. And I think banks are smarter today than they were in the early 80s. Those of you that are listening that were farming during the early 80s, we can remember that farm crisis. I don't think we're in that situation today. But if you look at that farm crisis, banks were lending a high percentage. I mean, you could buy a farm and a bank would lend up to 60% of that farmland value. Well, they're not doing that today. A lot of the farmland that's being purchased, again, that I'm aware of, banks are capping what they'll put in at about $2,500 an acre.
Right.
And so if I'm going out and I'm buying land for $5,000, $6,000, $7,000 an acre, I've got to come up with the rest of that. Now, and there's farmers that are able to do that. The profitability in grain farming has been pretty significant. But then I had a colleague of mine the other day that said, from Illinois, and he said, we've got to reduce expenditures on corn and soybeans for 2016 crop year, so we're looking at next year, by $100 an acre just to break even. And so if I'm unable to do that, and I farm 1,000 acres, what's my profitability at the end of next year?
So you say $100 per acre?
Yeah.
$100,000 in the hole.
Yeah.
Right.
And so, this becomes problematic. Now, I know some farmers that remember the last time and they've put money back and they said, we can withstand that, we know it's coming. But there are farmers that don't remember that or never have experienced that, or they've just entered into the business of farming, which is very capital intensive, and they're very highly leveraged, and they're going to struggle more so. I mean, it's. I think you need to be prepared for it. I know you asked earlier, well, what's the magic bullet? I don't know if there is a magic bullet. I think it's kind of like alcoholism. Being aware that you got a problem is the first step. And so, farming, if I'm farming, I got to be aware that I've got a problem. And if I'm in the situation where I've been doing tax management, selling last year's crop this year, I may not know I have that problem until tax time this fall after harvest. They should have seen a little bit of it last year already, but I think it'll become real clear this year.
So you offer very valuable service by going through this with people, right?
Oh, absolutely.
What kind of people should come see you?
Well,
besides like everybody.
Well, to me, if what I like to work with is farmers that really want to know where they're at financially, how am I doing compared to, because we have people across the extension in all the Midwestern states, and so we've got a great database called Finan through the University of Minnesota that everybody's data gets dumped into, and so I can now compare my farm operation to my peers across the Midwest. And so number one, benchmarking is a real way of knowing, am I doing better or worse than average? And I can benchmark everything from yields to pigs per sow to calf crop, weaning weights. All that data is there, but the real important ones are how am I doing in terms of profitability, how am I doing in terms of liquidity, solvency, and all the 21 farm financial ratios that we now have standardized across the agricultural industry. And so, if you're interested in that, there is a fee. Nothing's free anymore.
Okay.
But there is a fee, $100, and but we can get all the input forms to you. We can get that data inputted. I have a couple colleagues that work on this full time, and if you're interested in saying, okay, and then the other option, once we have that set of two balance sheets and an income statement in the middle, a beginning and ending year balance sheet and income statement, then we can get our ratios. But what we can do from that, if we've done a good job in building our budgets and knowing what our costs are of our different enterprises, we can project that forward. What happens if the price of corn goes to $3.50? What happens if the price of corn goes to $5? What happens if cattle fall off and go back down to $1 instead of $1.40? And so all of those things we can do the what if analysis then looking forward, and then farmers can start to get an idea of what is that rainy day fund that I may need to put back and to hold on to in case of. And so I think it's information, and again, management requires information.
Do most farmers keep all those records?
Most farmers have a beginning and ending balance sheet because their banker requires that of them. The bankers are doing these ratios, whether they share them back with the farmer or not. They are looking at those because they learned through the early '80 farm crisis when they weren't quite as astute either in terms of paying attention to that. And then the income statement really comes right off your income tax return. I can see what your sales are. And then the other thing that we highly recommend farmers to do is to do that accrual basis accounting, not for tax purposes. I would never advise that for tax purposes. Stay as a cash accounting farmer. But those accrual adjustments are necessary every year to tie this crop or this calf crop or whatever enterprise I have, this year's expenses and this year's sales back to this year. On a cash accounting basis, well, I'm paying for inputs last year for this year, and I'm selling this year's crops next year, and we got into that game for tax management purposes is how that all started. But if we can pull it all back to 1 year, then I can say, okay, was 2015 profitable as a standalone year? And it clears that up. And so we really recommend people to do that. I wouldn't change to an accrual accounting for tax purposes. Agriculture is one of the few that they allow us to do that. And part of that was really because of the volatility in prices. We can't predict what our bushel of corn we're going to sell for If I'm in the business of making widgets, I'll go back to my ag econ professor we talked about earlier. If we're in the process of making widgets, we pretty much know what our production cost is, what we have to sell it for. If we can't get that, we just don't make widgets.
We don't make them, yeah.
And
Or
farmers,
maybe you go to a different crop or whatever instead of widgets.
you do something different.
Yeah.
But
Absolutely.
farmers are the most optimistic people I know. I mean, they're gonna plant a crop and hope for the best
Right.
every year.
Yeah, there's floods and tornadoes and other type of events.
But the other question, and we probably haven't talked about this, and I think you asked it when we were off the air, is what happens if I can't make money doing whatever enterprise I'm doing? And let's just go back to corn and soybeans. If I can't make money growing corn and soybeans, when do I quit growing corn and soybeans? And again, I think you have to look at just your variable cost of production. Get out the budgets. Ohio State has some. There's a budget for about everything you want to grow, all the way from raspberries to get out the budgets and figure out what are those things that I have to spend out of pocket to raise this crop. I need to cover those costs. Because if you say, well, land charges, well, if I own the land, I'm not going to sell it.
Right.
I might choose not to rent a piece of ground. That's one option. But again, those things that I have, my line of equipment, if I do not grow corn or soybeans, I'm not going to sell my line of equipment unless I'm going to get out forever because it costs too much to get in. And so I might say, well, okay, I'm not going to recover depreciation on my equipment this year, but I need to recover fuel, I need to recover seed costs, and so you look at all those variable costs, and we'll still continue to grow till we get to that level. But now, as a farmer growing crops, we have options, and the main three options we have is corn, beans, and wheat.
Yep.
And we can throw hay in there
Hay
if
in
we
there
want
if you want
to.
to,
We
yeah.
can throw hay in there. And so we've got a couple different options. And I hear some farmers in my area right now, a lot of them are saying, well, I think looking at the budgets, next year I'm going to grow more soybeans. Well, if that farmer figured it out,
There's another one going to
the
do
rest
it.
of them probably figured that out as well. And so if we're going to all plant more soybeans next year, by harvest time, what's the price of soybeans going to be? A lot lower.
A lot lower.
Because supply and demand still works. And so, my advice if I'm making management decisions, which we all have to make, in terms of what crops I'm going to be planting next year. I mean, I've talked to farmers, and the seed dealers are already out trying to get pre-ordered sales for seed for next year. And so if I'm already locking in my seed cost and what I'm going to plant, if I'm planning on $10 beans next fall now, and I'm planting more beans, I might want to lock in some of that price. Just as a management decision, maybe not all. And everybody said, well, what if we don't harvest a crop? Well, I think if we go back in time, there's only 1 or 2 years that we didn't harvest at least 75% of our normal yield.
Right.
And so it's not not that it couldn't occur, but then we have crop insurance as well.
Yeah.
And you mentioned that you had a show on that earlier. And so, we have tools in place now to protect against
Cover it.
that downside risk.
That's true. Now, when you talk about crop insurance, though, you obviously pay that for this year, or do you pay crop insurance for the next year? Does that work the same way?
Crop insurance usually for corn and soybeans is purchased in February for the current year. So February of 15 is covering 15's growing year.
Okay. I always wondered about that because I never really did ask anybody, but I was like, do you buy the insurance for now, or are you buying it for next year's crop? Yeah, but,
Well, you buy it
yeah.
ahead of the planting of this
Yeah.
year's crop. And so wheat, I think, is September 15th, the deadline. I'd have to look those up to be exact, but somewhere in that area. But it's usually typically before we plant the crop, we buy the insurance.
Yeah. Now, do we have a lot of that? Do we have a lot of crop damage to where there's a lot of farmers around here that does do crop, collect insurance, or do we not really see a lot of that?
Most of the payments for crop insurance, in my opinion, and I don't have any scientific data to back
right.
this up, has really come because anymore we have revenue insurance. You can still buy yield insurance, but most farmers are buying revenue insurance, and so revenue is yield times price. Most of our claims have come because of a drop in price,
Okay.
not a change in yield. And so, yes, I mean, there's been some years that that's been pretty significant in terms of the number of payments that farmers get for their crop insurance.
You talked about some ratios,
Yes.
important ratios for people to know. What are those ratios that you were talking about?
Well, I mean, the one that I like, we need to look at liquidity. I mean, my dad started, and we scraped things together when I was a kid, and fortunate enough to survive some of that. But liquidity, do I have enough cash or cash-like assets to get through the next 12 months? I think we need to look at that one. And again, we recommend 1.5, or that you have 1.5 times the number of cash or cash-like assets that you have liabilities due in the next 12 months. That's kind of a minimum that we recommend. Now, can you get by with a ratio of 1? That's exactly the same amount you can get by, but there better be no hiccups along the way.
Right.
And so that's one that I like to look at. Another one I like to look at is they always say that working capital, but working capital by itself doesn't tell me much. We want it to be positive and growing. But if I take working capital and I divide that by the net farm profits, what that ratio that gives me is how much of my farm profits that I get to keep as cash. And so now I can start comparing different size operations, if you will, different types of operations, because it gives me a ratio and not a number. Because if I'm farming 500 acres and I have $25,000 worth of working capital at the beginning of the year, is that enough? I don't know.
You don't know.
What if I'm farming 1,000 acres and I have $25,000 worth? And so dividing it by your net profit gives us a ratio that now we can start comparing against farm sizes. And so I think that number is important to look at. And again, we say that ought to be 30%. And so just numbers, and all those guidelines are out there. If you want to Google farm financial standards, you'll find that sheet that lists them all, tells how they're calculated. And to me, that's a pretty good piece of information you can start making decisions on. The other one I want to look at is simply my debt to asset ratio. What percent of the business do I own? That's what that number tells me in short. I mean, if it's 0.3, the bank owns 30% of my business. I have 30% of my assets are in debt, and so the bank owns 30% of my business. Well, as long as I own 70% of my business, guess who gets to make the decisions? I do.
Yeah.
But now when that number creeps up, and of course the banks won't let it go there anymore unless something dramatic happens.
Wrong,
but if that number would creep up and all of a sudden the bank owns 60% of my business, now who's making the decisions?
They are.
The bank is.
Yeah.
And so, I think that's an important, and 1 year's number within itself is not so important to me as let's look at this over time. Because I may have made, and again, we'll go to a dairy industry, I made a significant investment in a new farm building. If I put up a new $2.5 million milking parlor, barn, freestall, the day after I put it up, it's not worth $2.5 million anymore.
Right.
It's
Just
not-
like buying a car.
It's worse than buying a car.
Well, yeah, true. Yeah.
It's worse than buying a car. And so, I may have made a significant investment in this business, and all of a sudden my net worth or my debt to asset ratio, because of the current value of it after it's built, gets a little bit distorted. Maybe it's 45% or 0.45. Okay, but I know what I did to cause that, and then am I gaining it going on in time? And so 1 year really doesn't tell the whole story. I think we have to look at multiple years and then remember, what did we do to cause that? And as long as we know what we did to cause that, and it's not something that's going to reoccur every year, so we're continuing to lose net worth or continuing, I think we're good. But if we never pay attention to that, we really don't know. The old joke when I was younger, and again in the 80s, farmers would say, well, I'm going to play the lottery. I hope I can win enough money to continue to farm. But if you're only looking at cash flow, you're going to wake up one day and be really surprised how bad off you are.
Does diversification as investing help a farmer? It's like I'll grow some beans, some corn, or should they all go into
All one crop?
Yeah.
Well, yes and no. what I give up typically with diversification, and it depends on labor availability, but what I give up with diversification sometimes is maximizing yield for whatever I want to specialize in. I mean, we can see that in lots of industries. And so, you know, if I want to get really good at corn and soybeans, you see very few large commercial grain operations with livestock.
Right.
You now see large dairy operations that have no land because they're going to buy all of that, because they can make, historically and typically, I can make more money doing this very, very, very well.
Yeah.
So a niche type
Niche
of
market.
attitude.
Yeah.
It's getting there. Now, the risk there is, even though I can probably do better very, very well, I'm now subject to all the volatility in that one market. And
Like I was saying, putting all your eggs in
you got
one
all your eggs in
basket.
one basket. That's right. And
Pun
so,
intended.
you know, if I was in the dairy industry, and here a couple years ago, milk prices went from $21 a hundredweight all the way down to $10 a hundredweight within about 6-7 months. And that went from making really good money to losing just as good of money.
Yeah.
But it recovered, and you know, if they could weather that storm, and so all these industries are going to have those storms, if you will. Right now, I see the grain industry coming up on that storm. They're right at the beginning. We've got a few more years to come out the other side. The beef industry, they're right now riding high. Storms coming, but that might be 4, 5, 6 years. I don't know exactly when. But I think my message is, just realize that it's not always going to be good, and do some financial management, financial planning, instead of just doing tax planning, because I think that can get us in trouble.
Well, hey, I think we're about out of time, and great conversation, and maybe we should extend this, you know, to another show sometime. But
Yeah, seems like there's a lot of different topics to cover on that.
a lot of them you could, split off, definitely. So, Chris, I appreciate you being here.
Good to be here.
And we'll get you back again.
Appreciate the opportunity.
So I hope you can use his contact information is at the bottom of the screen. Hope you guys have found this discussion informative and helpful, and examine your own business and see how you're doing. If not, ask this guy. So thanks for watching, and we'll see you next month on Agri-Talk.